Today's United States inflation report looked positive, but in my view, the market may be looking in the rearview mirror. June headline consumer inflation fell by 0.4% month over month, while annual inflation declined from 4.2% to 3.5%. Core inflation improved to 2.6% year over year. That's good news. But the main reason was the temporary drop in energy and gasoline prices during June. Today, oil is rising again. With United States-Iran tensions, risks around the Strait of Hormuz, and pressure on global energy supply, oil could once again become the main driver of worldwide inflation. The June report tells us what happened in the past. It does not fully reflect the risks building for July and August. The labor market is also weakening. Non-farm payrolls increased by only 57,000. Labor force participation fell to 61.5%, while April and May employment numbers were revised down by a combined 74,000. This creates a stagflation dilemma for the Federal Reserve. If the Fed raises rates, it could weaken employment and growth further. If it cuts too soon, oil and war-driven inflation could accelerate again. Kevin Warsh has begun his congressional testimony and will next appear before the Senate. The next Fed meeting is at the end of July. If rates remain unchanged, markets could receive almost 50 days of breathing room before September. However, another rate increase later in the year has not been completely ruled out. Japan is another major risk. The yen remains extremely weak, Japanese bond yields are rising, and the Bank of Japan still faces pressure to tighten policy. If the yen strengthens rapidly or Japanese rates rise further, yen-funded carry trades could unwind, creating sharp volatility across equities, bonds, and Bitcoin. So can Bitcoin become an escape point? Bitcoin has a limited supply, it is decentralized, and it is not the liability of any government or bank. That gives it long-term value in a world of expanding debt, money creation, and declining trust in central banks. But Bitcoin is not yet a perfect short-term safe haven. During the first stage of a war or oil shock, investors may still move toward cash, the dollar, and gold, while Bitcoin trades like a risk asset. My conclusion is clear. The positive inflation report may create temporary relief, but the larger risk has not yet been priced in. War headlines, oil prices, Japan, and the Federal Reserve will matter more than one backward-looking inflation number. This is Bahadır Kılıç. This commentary reflects my personal market view and is not financial advice.